I feel so tech savvy with these like little apps on here. Allie and Brittany. Yeah. Oh, that's interesting. What we got going on here? Okay. So excited. So I'm at my desk today. I'm not gonna be sitting in my little coffee chairs. And I finished all my coffee already this morning, so I should not have more. I've had too much caffeine. Oh, you're muted, but I love that stuff.
There we go. Got my pretend coffee.
That's probably what I should be having. I've been trying to get away from dairy for the most part, that's like milk and stuff like that, because I've noticed that I love heavy cream in my coffee, and I was using that for my coffee in the mornings. And then found a creamer finally that froths up like actual creamer. And this one, I noticed like my stomach doesn't feel like there's a balloon in the bottom of it after I get done drinking coffee. And so I've switched to that. Like yogurt and cottage cheese is still good, but and it's funny because I'm able to like have so much more focus, and like your gut health is your brain health. And it was funny, I was talking to somebody about that last week, somebody that I had seen at the nail salon that I hadn't seen in a long time. And I was like mentioning some stuff about food. Like I love Diet Coke from McDonald's, but I stopped drinking that when you went on your like soda
Yeah.
high. I haven't drank any soda since then.
Yay.
And I have just felt so much better and been able to just thinking like at night. So I'm really, when I get tired, normally my mindset goes like way downhill. And I have noticed that it's gotten a lot better in the last 4 weeks that I've like
Oh,
cut a
that's
bunch of
great.
crap out. Yeah.
Yeah.
So I'm gonna stick to it. And then, I was doing 75 hard, and I'm intentionally deviated from that on our anniversary because I was like, I just want to enjoy like
Oh,
my
yeah.
anniversary, not have to whatever. But I went right back to like, I don't want this just to be like a challenge. I want this to be my lifestyle. So I still like drink the gallon of water, work out twice a day, not eating crap. And like we had a container of cookies that my husband had made for 2 weeks, and I didn't touch it. Like that normally
That's
would have never
so
happened
awesome. Yeah.
before. Yeah. And so it's the little things, but like
Mhm.
that's the thing I really want people to understand. I mean, I see how everything affects your cash flow. And we talked about this, I think last week, like how you can relate how you eat back to your cash flow. And the thing is, like, if you are not performing well in your business, like, look at what you're eating, look at your sleep routine, look at your relationships outside of your business.
Mhm.
Um, people that are having like marriage problems, like that's going to affect your business.
Yeah. Hmm.
So you gotta like look at all of those things. And so I just think it's been really fascinating and fun to be able to see that. And that's one of the things, like, how do we integrate this into business for people more often and help them to see like the value of that? And so um just sharing that in there, because I mean, so much your business is a reflection of your mindset and your own health a lot of
Hmm.
times. So
100%. I think it's, a perfect example of it is, the sales girls that I consume so much of their content, Macy and Kat, but they have, their sales girl protocol for it, right? And it's all about eating healthy, getting dressed, putting on a thoughtful outfit, they say, getting a minimum of 45 minutes of exercise every day, reading 10 pages of a book every day. Is similar to, 75 hard kind of structure, right? But just their own version, and how within their community that they've created, people who are following their sales girl protocol, how immediately people are seeing different results in their business, because all these different types of things, it may not seem like a business thing, but it affects your business, because your business is you. And if it's affecting you, it affects your business.
100%. Yeah. I mean, like, if you are eating a crap diet, and then you show up in your business and you're only effective for 2 hours versus you change your lifestyle to where you're just not eating crap, but maybe you have one, like you literally have one meal a week where you go all out and enjoy the hell out of it.
Mhm.
And like imagine if you can have 4 effective hours maybe in your
Yeah.
business, like how much more would that, what kind of a difference would that make for your business? And
Mhm.
because the thing is like, there's a lot of people, business owners that are working 12-hour days. Well, I would question like, what does your diet look like?
Mhm.
Um, with that, and then you wouldn't have to work like that if you were eating better and taking better care of your body. I think that was one of the things about 75 hard too, is that I had not taken care of myself that good for so long, which I think is funny because there's like a bunch of critics out there of 75 hard, and like they bash it for whatever, like you're gonna get water poisoning, or which is, I hate just people's like mindset for stupidity is crazy.
Yeah.
um but I'm like, I have not taken care of myself this good, and I can see how I have so much more clarity as opposed to 3 months ago, just from doing that program. And it's not even a business program. It is
Mhm.
a like personal optimization
Yeah.
thing.
Mhm.
Um, so like what you eat, your nutrition is so important to your performance in your business. I mean, it's not any different than being an athlete. It's not,
No, no. And I think one thing that I love so much about working on habits like that, um, I just read the book I read just the other day, was Atomic Habits. I hadn't read it before and
oh,
super
you hadn't read that?
addictive.
It's such a good book. I need to
I
reread
know.
it.
I know. Well, it was interesting because it was very much a lot of what I've heard and believed. And so it's good. It was good to hear it just kind of in different words, and whatnot. But this concept or this thing that happens, that the author talked about, is something I've noticed in my life. He said, was talking about stacking habits, and that a lot of times once you've really kind of established that habit, that as time goes on, your mind and your body is going to start to expect those things, right? So, for example, if when you get home, you immediately change into your gym clothes and you go exercise, that when you get home from work now, your body's going to start to, be anxious and ready to exercise, right? And so like for me, I've noticed with food in particular that when I am more intentional and get better about either eating less of one certain thing or eating more of something else and eating better overall, that then anytime I go to, oh, we're celebrating, let's have ice cream, with the girls, or it's Friday night pizza movie night, that after I eat that, I feel so sick, like way, faster, because my body's just like, oh, we're not used to this anymore, and then it pushes me back to doing the good things again.
Yeah.
It's just
Yeah.
positive perpetuation, which is
Well,
awesome.
that makes me think about just like life in general, but especially when it comes to food, when we're routinely eating stuff that, even if it's like health food that's like processed food that has been manipulated to look like health food. Like
Yeah.
the thing about one of the things that about just life in general, but especially about entrepreneurship, you hear people talk about the comfort zone all the time. It's like you got to get out of your comfort zone. But the thing is that most people are not in their comfort zone. Most people are in their familiar discomfort, is what they're
Yeah.
used to. They're used to that. Most people don't even know comfort. They're just used to dealing with what is uncomfortable, and it's so familiar to them, and they have become so acclimated to that. And it's our bodies. It's like you eat crap all the time, your body is not healthy. It may be operating, but it doesn't mean that it's healthy, and it's certainly not optimal. And so the same thing happens is like you eat that stuff all the time, and then if you just do that all the time, like on Friday nights, it's no different than a Thursday or a Tuesday night. Like your body doesn't know. And so like when that does happen, like that's a good thing. It's like, okay, well, on the opposite side of this, I feel like crap, but I know that, okay, I've been doing something right if this is making me feel bad,
Hmm.
almost. And so I mean, you can translate that into your business. Like, if we look at their financial lifestyle with how you manage your finances, I don't expect people to become financial gurus or pros like we are, and like how to organize data and what it all means and things like that. It's like knowing what you need for your business. And so I like to look at like the financial health stack of a business. And what I mean, I think that what I would look at with that, kind of translating that over to what I wanted to go over today with that break even calculator, is that break even calculator, that is something that I would look at every single day. Just like you would work out every day, you're going to drink water every day, you're going to eat nutritious food every day. And then every week we look at that CEO dashboard to check on our cash flow indicators, because that's part of our financial lifestyle now. We're not on a diet, we're not sprinting, we're not going to just do this for a short while. Because the thing is that if you start doing that and you have that consistency, and then you travel for a week and you go on vacation and you don't look at your KPIs, and then you come back and you're not looking at your break even calculator, and then you come back from your vacation with your family and you don't pick that financial lifestyle back up, your business is gonna, I don't want to say your business is gonna tank, but you're gonna see it. You're
Your
gonna
clarity
start,
will suffer. Which
yeah, it will. And you're going to start losing that intentionality. And then the thing is like all of that data at the end of the day is a leadership tool. It is a process tool. It is a quality control tool. And we'll eventually go over the CEO dashboard in here. I think that I want that to be a series where we cover that outside of our coffee chat, because there's just so much to it. And so we have a training on our website for it, but that's the same thing as like consistency thing. And who was I talking to yesterday? And we were talking about like, the thing about the information, like data, and learning how to use that to assess the health and performance of your business, just like our weight is an assessment of our health and performance, right? Or our BMI and things like that. So you can look at all these and translate this directly over to business and how it's going to affect it. And so if you're not looking at that stuff every day, I can guarantee you that you're losing cash flow in your business if you don't know your data. And you don't have to, like I said, you don't have to look at balance sheets and income statements. I actually discourage people from trying to look at those all the time, because we
there's
went
so
to school
much
for years.
on there.
There is so much data. And this is where also, having intentionality and having a business plan. If you don't have that, then all of the data looks relevant, which means that none of it is, because we don't know what we should be focusing on. And so that's really where, setting targets is really important, doing that CEO dashboard. And so today, so when I going back to like that financial health stack almost, and then once a month you want to be looking at your financials every month and going over that. And that's one of the things that we'll do with folks. And we want more people to take advantage of that access that they have. And then every quarter, going through and resetting your business plan, going through and doing your core initiatives. And if you've never built a business plan, you need to build that first. And that's one of the things, like, we help people do that. We have a really cool, fun framework to like build out and design your entire business. Like, makes it really simple. And the thing is that you don't have to do this big business plan every year. If you're doing this every quarter and resetting like your core initiatives, like your core focus, and you're setting data targets to align with that, you don't really ever reset or redo this business plan. You just maintain it. The only time you're really ever going to do it is like if you've got to that point where you built your business, you've grown your business, you've scaled your business, you hit that ceiling where it's like, okay, we need to go back to the build phase. So then we're going to expand into another segment now, for instance. And so we're going to have a completely new offer. This is going to need new expertise, new team members, new infrastructure. We have to redesign our infrastructure because it no longer maintains the capacity. And so then you would go back through that planning process. But otherwise, like, once you set up the systems, it's so simple to maintain it. And it's just like the hardest thing with taking care of your body is getting started if you've not done it before. And that's like the Atomic Habits thing, like going back to, that's such a good book. I need to make sure that's on our Amazon list, because I think he talks about habit stacking in there, and he says something about push-ups. He was like, instead of trying to do 500 push-ups every day, start with doing one. Yeah. Yeah. Start with one. It's like the CEO dashboard. Like, you don't have to track 15 KPIs, like track 3.
Yeah. Start with one. And that's like, that's why we say, don't stress about reviewing the financials. If they're having meetings with us, we can, go through and give you a summary, but that CEO dashboard is is that focusing in on what is, the area that we want to improve, are we wanting
Yeah.
to improve cost of goods sold? Are we wanting to improve client retention? Are we wanting to improve, all these different things? And whether it's the CEO dashboard or however else they're tracking KPIs, I mean, that's going to give you the focus to really pay attention to those things much easier.
Yeah. And so
It's the
like on
one
that note,
push-up.
yeah, exactly. And it made me think about like, how do we assess like what to focus on? Like, what is the one thing? Because there are a lot of things in business that you can focus on. The great thing about having a team is that you don't have to focus on everything. You can delegate these responsibilities. However, you as the CEO, you are meant to lead your team and you are meant to design the vision and make sure that we're staying on track of that, and having that implementer. But it's like, how do we assess what is the one thing we need to focus on right now? And that's where I go back to knowing what your net operating profit is so important. And so if we already know that that is not where we need it to be, then we start to reverse engineer. Okay, what are our other ratios? So I would say the four most important ratios that we're going to be looking at to determine like where do we need to focus on first and foremost in this business. If we are just looking at profitability, not even touching cash flow yet, because that can be a separate beast.
Yeah.
Because just to give some context for that, for example, for folks is say we have a client that they are in an industry where they do accounts receivable. So they essentially sell to clients on credit and they let them go ahead and get the work done now, but later on they will invoice them to pay them. So you're going to have accounts receivable. Well, if you're properly accounting for that, you're going to show profitability because you may be showing profitability because you were earning revenue. But from a cash flow perspective, if you don't have good processes around cash flow and collections and accounts receivable management, then you're going to be cash poor and you're going to look profitable, but you're going to be cash poor. And so you're going to be like frustrated when you're looking at your financials and your accountant says, hey, your business is profitable, but your bank account has no money in it, and you don't know why that is. And
Yeah.
so this is why when I talk about profitability versus cash flow, they are different. However, if you are not profitable, you absolutely will not have good cash flow. You can be profitable and not have good cash flow, but you absolutely cannot have good cash flow and not be profitable.
Mm-hmm.
And so when we come to profitability ratios, it's like, how do we assess what this is? And the thing is that I want to lay down is that, every business believes that they have a foundation to be able to get people results, right? And so we could look at the same thing for aesthetics is that you can go and inject somebody with Botox and reframe their entire face. But if they aren't taking great care of their skin, then it's like slapping lipstick on a pig.
Mm-hmm.
And that's not what we want. And so it's like we want to make sure that we have the foundation first. Like, are they going to incorporate the lifestyle that's required to make sure that not only do they get these one-time results, but they maintain these results? And that's why coming back into it's so important to, yes, have somebody that is maintaining your financials for your company that you can trust is accurate, but it doesn't mean that you have to be as an expert like they are looking at financials. You just need to make sure that you're going to have accurate data for your break-even calculator to make sure that are we on track to be profitable for the month for your CEO dashboard, to make sure like when my assistant is pulling data to input and update our cash flow indicators, we can trust that this data is right. The foundation of that is having solid financial accounting in there for that. And so I was gonna pull up. I wanted to pull up. There's a sample company in QuickBooks because one of the really important parts of being able to use this break-even calculator, and I've made a training on this. I believe it's in Progress University already, but I've updated a few things on here, so I want to go over it. And I really want to show how like you're going to need some data from your financials to be able to get this. So every client that we work with uses QuickBooks Online. Even if you don't, I'm going to show you where to go into your QuickBooks to get the information you're going to need for this break-even calculator. And Courtney, like along the way, if you're like, hey, I think this would be good to add in there, like just stop me because I'll keep talking.
Sounds good.
I'm going to share my screen over here and I'm just sharing this break-even calculator right now. If I have a bad habit of forgetting that I need to share like a different screen. So if I start talking about QuickBooks, like, and I
Oh,
have
yeah.
to,
Have you
never
switch
mind.
over? Okay.
Yeah. Um, okay, cool. So one of the first things that I want to touch on is this is a practice. This is just an example for the last 3 months of a break-even calculator. And this is the exact one that we use. And I'm going to go over high level what this information is and where to get it. So this is something that you should be. One of the things also that I really encourage to do is that you should have an assistant in your business. I don't care if you're just starting out or if you've been established. If you don't have an assistant, you absolutely need an assistant. Because objectivity, we want to we don't you don't as the CEO, you want to obviously be able to delegate and effectively lead a team. And you want to make sure that they are getting this data from a source and you can look at it objectively. Because the thing is that if you're going and you're pulling this data and you're just saying like, I know this is where to get this from, you're not going to be looking at it with as much criticalness as if you were pulling it yourself. And so I want people to be able to say like, with this break-even calculator, you also need to have an assistant. And that person is going to provide so much value to you beyond inputting data into a break-even calculator. But this is one of the things that I would have them to do. And so when we get clients that we want to empower them and make and help them to be interdependent with us. So it's like we don't want to build a financial foundation where you have to rely on us to get all of this information at the end of the day. Because like you're going to be building and scaling a company. Our goal is that you're going to grow this company. You're going to bring in an in-house accountant. And then when you expand to another company or another location or whatever that looks like, we're going to be able to follow you over there. You have the systems and structures and team in place to be over here to essentially like automate this business. You're still going to be the CEO of it. But as far as like this stuff is concerned, we have a team that takes care of this in-house for you. So we want to teach you how to use this and where to get the information. So on this break-even calculator, there's 2 columns on here. So this requires you to be intentional and have a business plan, right? Because we're setting current month targets. And so these blue numbers in here, just to put some context, these blue numbers are what you will manually update. Everything else in here is a formula. Now, one of the things that I will say is that this number right here, and I probably actually need to change the color of that just to provide some context. This one right here, you will update the formula for just a little bit because this is going to actually be divisible by the amount of current month working days, which can actually fix this formula. See, this is the good thing of like going back through this and reiterating it. You find things like, oh, we don't do it that way.
Yep.
So this blue data, going back to that, that's all you got to update. So a couple of things on here. One, you want to have a current month target. So you should be setting goals to work toward anyways, right? And you know that you need to have a certain level of revenues to just cover your fixed and variable costs in your business. And we'll talk more about that in a moment. And then once you have that target in here, this formula is going to tell you based off of what your revenue target is for this month and the amount of current month working days. And so if you are open only 5 days a week, then you're gonna look at that month and you're gonna count how many days. Like that's super simple. I know you can figure that out. So you're going to go in here and you're going to put those current month working days. Now, throughout the month, when you are going in here and updating this every day, say you're on the second working day of the month and you've already had one business day, you're going to update this number right here for the current amount of days worked. And so that way it just stays up to date. This is why you want to look at this every single day. And so, but when you update these 2 numbers in here, this current month working days and the current month target, it's going to tell you based off of the target that you have for your revenues, this is how much on average you need to generate in revenues every single day, which I think is so fun to be able to see because it's like, okay, we know that that's what we need to work toward. And then one of the things from here is that this isn't going to tell you this, but this is where going into business planning and being clear, like, okay, if we are selling products, if we are providing treatments and services, how many of each of those do we need to provide and sell on average on a daily basis? And so we know what the revenue is that we need to hit. What is the volume that we need to pump out as a result of that? So you might have to do this is going to bring so much clarity to you because it's like, okay, we know that to hit this, We need to generate this much revenue every working day. And so it's like, okay, let's go to the financial lab and let's figure out how many of these of our retail products are we going to focus on selling every day. If we want retail to be 20% of our average daily revenue, so about $1,500, how are we going to implement a plan to make sure that we're selling products with every treatment that we provide? So think about like a med spa, for instance. So we want to make sure we're always soliciting that opportunity for people to really enhance their skincare and maximize the long-term results from the treatments that they're getting. So we're going to make sure we encourage every client, as part of your treatment plan, we recommend that you get these products, and you're going to do that every single day. And so going back into how data drives processes, okay, if we know that we have a client relations person or a front desk manager and they're going to be checking out our clients, we need to make sure we have a process for maintaining the treatment plan in our point of sale, so that that client relations manager can or front desk person can confidently ask them, hey, do you have enough products left over still for your treatment regimen to make sure that you still have the beautiful glowing skin that you want? Whatever that looks like, and just having like that training and that verbiage around that, so that they can confidently encourage people to maintain that. And it's not about hoaxing anything with anybody. It's just about having a consistent plan to get consistent results. So there's so much in that, like I feel like I could like touch on. And so if we know that 1,500 of this is going to be for our retail products, then we need to have a plan to make sure that the other 4,500 is in treatments every single day. And so then it makes it a lot simpler. Like, okay, now that we know that, and you can, the cool thing about this is that, say this is for, say we're sitting in, we'll just hypothetically say that we're going forward in time, because we like to go forward, not backward. We're going to say we're in February of 2025, and we are forecasting out our plans just to make sure that we're hitting our goals. We're forecasting out our plans for March, right? So we know that we need to hit this much in revenue. And so we're saying, okay, I'm going to go in and we're going to look at our client calendar for the month. And we're going to see how many treatments are already on the books, because one of the processes that we also want to encourage our front desk associate to make sure they're doing is rebooking the client for their next appointment before they leave their last one. And so that's going to focus on helping us to make sure that we are more closely hitting our revenue goals. And so when we hit those goals, and we see like, hey, we're in middle of February and we're planning out how we're going to hit these goals for March, our calendar is only halfway full. How we're going to get it full the rest of the way to make sure we're hitting these revenue goals on a daily basis. And then you're looking at each of your team members filling up their calendar. So you can do all of that planning and analysis from these two inputs that gives you this number. Like, we just went through an entire plan for your business with 3 numbers, and that was it. So after you get clarity on that, so the next thing that you really need to know is your prior month gross margin. And so your gross margin, you may be calculating this different ways. It's really important to know, how are you calculating your gross margin? So say we're looking at gross margin is for a med spa, and we're just looking at gross margin, which is revenue less their cost of retail product and their cost of consumables. And say their gross margin is 70%. So that's really going to change what this looks like, which is going to be a great thing. But realistically, if you don't have data on it, your gross margin actually should be your revenues less the cost to produce or fulfill the service that you're providing, and the direct cost of labor that goes into providing that. That remainder is your gross profit or your gross margin. Those terms are interchangeable. One of the things that I want to make sure to iterate as well is that your terminology is so important. And I was speaking with a client yesterday, and they kept referring to net profit. But the thing is that net profit does not mean what they were thinking that it meant. And so when we were having a conversation, there was confusion around net profit, because net profit is actually what is left over after your direct costs and all of your overhead costs of operating your business. Your gross profit is what's left over after your direct cost. It does not account for the overhead costs of operating your business. It does not account for your admin staff. It doesn't account for your rent. It's not accounting for your dues and subscriptions and your software costs. Like, it doesn't account, your gross profit does not account for any of that. And so terminology, making sure that you understand that is really, really important. And knowing what your gross margin is really important. And so I don't think on the sample company in this QuickBooks, we'll go and look at this is Craig's landscaping services.
Make sure you get switched over to that.
Yeah, I am. You share. I'm actually gonna do my whole screen because you can see everything side by side. If people are on their phone, this is gonna be like ant size. They're not gonna be able to see this. You'll have to look at.
Yeah, go to your computer if you're watching this on your phone.
Yeah, one of my favorite reports in QuickBooks is profit and loss by month. So we want to be making progress, and I want to be able to see that month over month over month, right? And so I always look at the profit and loss by month. Anytime I'm looking at somebody's financials, I don't even just look at a lot of people just pull a straight up profit and loss. I always look at the profit and loss by month. And oh, I do not like the way that this one is laid out. This looks awful.
We need to create our own sample company.
Yeah, we're gonna end up having to do that. But and I never
real quick before you keep going. Okay, yeah, I was just gonna tell you, why don't you take off that sidebar? But that's what you're doing.
And always take the change off of there, because the thing is, one of the things I really want to drill into people is like, when you're looking for data, when you're looking for information, if it's not going to materially change the actions that you take, it doesn't matter. Change is not going to affect the decisions that you make in your business. And even when it comes to dollars, you got to think about like materiality as a concept in auditing. And then if you think about financials, when it comes to like a publicly traded company, like somebody you may have invested your money into stocks, then those are publicly traded companies, right? And so you can go and pull the financials for all those companies. Well, one of the things they do with publicly traded companies is that those financials get audited. And one of the things, multiple things that auditors are looking for is that is there a material misstatement in this? And what that essentially means is that is there a material difference in these financials to what they actually should be that's going to affect the decision of a shareholder or an investor, essentially. And so when we're looking at financials on here, we want to get them as accurate as possible. However, when it comes to, it's like, if we're not going to be getting down to the penny, because the thing is it's not going to materially affect the decisions you're going to make in your business. So I just really want to point that out here. Now, on this sample company that we have here, to get your gross profit, you're going to see that if your financials and your chart of accounts are set up properly, then QuickBooks is going to give you a line on here that says gross profit. That's the same thing as gross margin. We probably actually will change that on here so that it's really easy to be able to see that. But it doesn't show you the ratio. So you can manually calculate this, or one of the things you can do is you can actually change this to where it is a percentage of income. And this is something that I look at every single month when I'm looking at financials. So important, because the thing is that the dollars matter. However, there are certain ratios that are going to maintain relative like sameness no matter where you're at in your business. And gross profit is one of those things. Your direct payroll costs relative to the revenues that you're generating. For the most part, when I think about construction, med spas, any other service-based business, like kind of like that, any kind of like medical practice, stuff like that, your direct labor costs, your direct consumables costs, those ratios relative to your income are going to stay about the same no matter what level of revenues that you're at. If you're at 100,000, a million, 10 million, those ratios are going to look about the same. So that's one of the reasons we always look at that. So you can change this report on here to where it will show you that gross profit percentage. So if we go and look at March, for instance, and we want to see like how much was our gross profit, this is still not, I don't think this is showing it correctly, actually. So that's a bad example because it's showing that this is income. Oh, because there's no cost of goods sold allocation on here. So it is showing it properly. So if we look at May on this profit and loss, for example, it does show for May because there is cost of goods sold. So the total income for May was $4,400. The cost of goods sold was 405. I would say these financials are not real accurate because there's no way you're providing lawn care and landscaping services with no direct costs. So this is not the best sample company. But if you, if we're taking care of your financials, you're going to be able to rely on this information. So I'll preface it with that. So we're going to go in here and we're going to look at our gross profit was 91% for May. So that's what the number is that you would put in here. I'm not going to use that in this example because that's unrealistic. But that's where you're going to get that number. You're going to get it straight off these financials. And that is something that we can, shoot us over a text or a message or something in Telegram, like where can I find this info? We will help you find that for your business. No problem. So that you can update this. And like Courtney and our team, like they are in there all the time, so they can get that for you like nobody's business. And one of the things that's important to know is it's asking for what your prior month overhead and your prior month gross margin is. Because the thing is that we're not going in these financials are kind of like what happened after the fact. And there's data that you can take from your business, from your point of sale or your CRM, whatever that is. If you're using prior month gross margin, prior month overhead, this stuff should not be going all over the place every single month. So you don't need to know like what it is today. You need to make sure that you have processes in place that you're consistently hitting this gross margin and that you are not having like a bunch of one-off stuff hitting your fixed costs, which is a whole other, process and coaching opportunity to go into, but we're not going to do that. But this stuff is going to maintain consistency for the most part. You do want to be aware of things in your business. Like if we know we're making a big investment this month, is that a routine fixed cost? Probably not. But as long as your fixed costs are pretty consistent and you're focused on growing your business, then getting this prior month information is going to be solid for you. So I'm going to actually go down to last month on this just so it's not so overwhelming to look at.
Well, so real quick, did you and perhaps I'm just having short-term memory loss, but did you kind of touch on where they're getting the prior month overhead, like where they can find that total on here?
I'm about to go on that.
Oh, okay, perfect. All right. Same line of thought.
So you're going to get this prior month gross margin straight from this gross profit line. If you want to calculate this manually though, all you're going to do is take your gross profit dollars. So this 4,022, and you're going to divide that by your total income. Now you're going to hear me also. I usually refer to income as revenues or sales instead of income, because when I'm thinking about net income, I don't want that to get confused with revenues for people. So for sake of QuickBooks core terminology on a few things in here, I'm going to call this revenues. And so you're going to take your gross profit in dollars divided by your revenue in dollars. And that's going to give you your gross profit ratio right there. So we're just going to round that to 91%. And that's where they're getting this number right here. So you're going to take that and say this says 70%. I'm going to take that and put it over here. As far as your overhead is concerned, where are you going to get that information? Net operating income. This is something that when I am assessing the financial performance of a company, my eyes go straight to here. I don't look at anything else. When our team gets finished closing out financials, I don't look at anything else. I look and make sure that the balance sheet is accurate first. And then on the income statement, I go right to this net operating income ratio. And I'm looking at what is this? If this is not 30%, because that's what we want you to hit in your business is 30% net operating income. If this is not 30%, then I start reverse engineering. Like, okay, what other ratio is out of whack? Is it our overhead ratio? Is it our payroll ratio? Is it our gross profit? Is it the cost of goods sold? Just the consumables portion? And one of those is going to be really out of whack if this is not where we want it to be. And that's how we know where to course correct. But say we're all solid and we are just tracking that this is consistent and we are focused on growing our business. So we're looking at net operating income. This line is really important. But as far as your overhead expenses, where do you get that number? It's going to be right above that where it says total expenses. That's going to be your prior month overhead. Now we can't change this in QuickBooks to say anything other than what it says. So you just got to know what is this? And the thing is that when we are putting together financials, sometimes we will keep payroll down in the overhead or the regular overhead expenses, even if there's payroll that is directly related to the revenue generating operations of your company. And there's reasons for that that is unique to every client. And so just one thing to understand when you're looking at this. So your total expenses, this is where you're going to get this number. So you're going to put this right here in prior month overhead. And this generally is going to be fixed. Now, you may have some expenses that are in your overhead that are going to increase as your revenues increase. And an example of that would be, if we look at a construction company, for instance, they're going to have fuel costs that generally, if they are generating more revenues, they're probably going to have more fuel costs. But we are not going to be tracking every dollar of fuel spent to every job that they complete necessarily if we don't have to. If they do like a bunch of jobs, maybe they do service work and it's just a bunch of like little short jobs or something that's really generating their revenue, so they have a lot of volume. We are not going to be accounting for that up in your cost of goods sold generally, because that fuel may be spread across going out and giving estimates and quotes. It may be spread across service and repair. So there's a portion of that overhead that we can allocate to the cost of the company, but for the most part, we're going to keep it down here in overhead expenses because that is going to be a variable cost. But the value of going and tracking it directly to every single job does not outweigh the cost to do that. So that's one of the things that we are looking into when it's coming to tracking expenses and it's like, at what point does that become valuable, essentially? So you're going to have some things in your total overhead expenses that are variable. If we think about a med spa, for instance, like your medical supplies, like costs of like
gloves and looks like Brittany is frozen. We'll see if on the recording if if she comes back. But those supply job materials, so what she's kind of saying, what I started to say, so things like gloves or wipes, things that we're not similar to the fuel, we're not taking that cost, and it wouldn't be cost effective to figure out, okay, I'm spending 10 cents on gloves or this much on wipes for every single thing, right? Those are kind of just some costs that they're going to fluctuate as sales increase, because you're going to use more gloves as you have more patients and provide more services and whatnot. So things like that are going to change. Additionally, with cost of goods sold as well, your inventory, as you are providing, if we're following the med spa example, as you're providing more services, you're going to be using more consumables, right? The more injections you're giving, the more you're using. And so that's going to start to rise as well. But the one thing to keep in mind with cost of goods sold is we want to be able to have a consistent percentage. And that cost of goods sold percent is going to vary from company to company based on the industry they're in or based on where they're at in their business. So for example, with med spas, usually right at the beginning, we usually see that their cost of goods sold is around 40 to maybe even 50%. And that's typically a result of pricing. And once we get those prices established, then we can kind of go from there. So paying attention to those percentages is what is key. And that's something that we can, help you guys with if we're having those meetings and whatnot. And those are questions you can shoot us over an email, say, hey, what is my cost of goods sold percent at? Am I where I'm supposed to be? things like that. So looks like Brittany has back. Awesome. So I just kind of expanded when you kind of cut off right where you were starting to explain kind of what those job materials are, or like supplies costs. And so I just explained kind of what those things are and why, we're not getting super granular as that particular cost tying to a specific service or treatment if we're following the med spa example. And then just explain that with inventory, cost of goods sold, we'll also see a little bit of increase with that as well. But the key with cost of goods sold is that we want to make sure we are paying attention to the percentage, because while the dollar amount may change, we want to make sure that that ratio is consistent. So
Yeah.
that's kind of where we left off.
I think one of the things that I would think about with that is that, yes, your cost of goods sold, like when we think about the materials that it takes to do like a door installation for a construction company that does like overhead doors, or when we think about the material of the consumables cost to provide a hydrofacial treatment, or actually let me think, like more like injectables or something like that. One of the cool things about this, like, yes, you're going to have a unit cost. Like, you're never going to get to where you have 100% gross profit. You're just not. You're not. But one of the cool things about it is that this is where I think about growth versus expansion. And growth to me is focusing on mastery. And you can have a service that maybe right now, like as far as the industry is concerned, you are hitting average gross profitability. And maybe that's 50% for your industry is average industry standard. However, you have a unique tilt or a unique angle or some kind of mastery where it's like you are so well known for this technique or for the way that you do this or for the service that you provide for people that is unlike anywhere else in your area or anything anybody knows. Like, the cool thing about this is that you actually get to command, like, you're going to have so much demand that you're going to need to be able to command higher pricing, which is going to improve your gross profit. And so that's one of the things, like, we want you to focus on mastery and growing and being exceptionally profitable with what you have before you expand, because expanding and having more things to offer does not make your business better. I would question people like, and that's something where I definitely don't claim to be an expert at sales. And it's something that Courtney and I actually, like, that's one of our core initiatives this year. And it's so funny because you think you're okay, and we've been so blessed in that, like, we have gotten nothing but referrals, and I love that, and I just want to be able to know that I can sell. And so a lot of that though comes from understanding the mastery behind what you do. And so I would question that if you are not hitting at least 30% gross or 30% net operating profit in your business consistently, you do not need to expand your business. You need to grow your business with what you already have. You need to refine that skill set. You need to master that. You really want to become known you'll hear us talk about being known in an industry of one, because I don't believe that there is competition out there. If you're too worried about what somebody else is doing and you think you need to be like them, you're not focused on being yourself enough. And that's really where you're that exceptional, that unparalleled profitability is going to come from, where you're not an industry standard.
I think this weekend, I saw a post from Alex Hormozy. I think he was speaking at a conference. You may have seen this already, but there was someone who was asking him pretty much this, like, hey, when do I expand what I'm doing? When do I add another leg to my business, or something along that line? And Alex was like, look, if you are, I don't want to get the numbers wrong, but he said, for sure, if you're under 1 million, like, you don't need to be expanding. And I think he even then went as far to say as like, you should be able to get up to 5 million in revenue without expanding. And right. And so, I mean, that just is, proof from someone else who is doing this with multiple businesses, that consistency is the first thing. And we're using numbers to explain that, right?
Yeah.
We're saying net operating income, if you're not hitting that consistency, that's why we need to grow, because you have so much room to grow with what you're doing. And just one other little tidbit, one thing that James Clear talks about in Atomic Habits, he says typically, well, what you want to do is you want to kind of find about the 80% of things that you're super good at and exploit is what he says, right? And that's what we're doing here is you're making progress with what you're doing. So let's squeeze every last drop out of it, right?
Yes. Squeeze all
Exploit
the
this.
juice out of the
Yeah,
orange.
and
Yeah.
once you've wrung that out, it is completely dry, then yeah, let's look,
Yeah.
and these
So
ratios are a good indicator of helping you
oh
know
my
when.
gosh, yeah. And so like with looking at what is consistently, like how do you know like, okay, we've been hitting this consistency, but like what is consistency? Is it 3 months, 6 months, 12 months? I would say if you can go 12 months and you end the year and you have solid, like not 29.9%, but you have solid 30% net operating income, then we can start building a business plan where it looks like, okay, we are doing this and now we want to make sure, like, can you maintain this, like, if especially if you're the owner of it, can you maintain this without having your hand in it? Can you just lead it? Can you have
Yeah.
other people produce that same result? And if that's the case, so that you can truly become a CEO, not a CEO and an operator, if you can truly step out of that role and still generate that profitability, let's talk about expanding it. And that's another one of those things where like talking about a million, like looking at data and looking at benchmarks, like I don't think this is a belief that I have. Some people have disagreed with this, but it is what it is. I don't believe you should pay for marketing or advertising until you've made it to $1 million, because you don't even know who you are until you can at least establish that. Like
Mhm.
you just don't. And so the thing is, like, you do not want to go and pay somebody to compound your confusion. If you don't know who you are and you don't know, like, these are the people I want to serve, this is the way that we do it, this is like the simplicity that we offer to people, whatever that looks like. If that is somebody that is selling a natural way to do makeup, like, you should not be paying for marketing and advertising until you can do that consistently up until $1 million in revenue.
Mhm.
So
It comes back to going through that business plan, and part of having a business plan is knowing your core initiatives. And you touched on a little bit earlier, what is the thing that sets me apart, right? What is the progress experience? What is, the thing that makes you unique, right? And all of that, having that plan and that understanding, and then watching that translate into the financials.
yep.
That's
Because the thing is that looking at this, like these financials over here, this is like reading Arabic for people. Like, and I say that
yeah.
because I don't know how to read Arabic. And so, but like I look at this and I'm like, there is so much of a story I can tell off this. I can tell you that Craig's landscaping services needs to pick up some volume over here. And I can tell you that there's probably some costs that are not accounted for in here. But
Mhm.
and then there's like some miscellaneous in here, like that's not even allowed. Like what do we got going on here? But I
Yeah,
can
it's
like
so
just looking
big.
at yeah. But the thing is that numbers tell a story. And so when we go back and we're like saying like, yes, even if this is not what we want it to be, it is what it is. What is the story this information is telling us? Like we broke down this average revenue per day to translate into direct actions from that one number. And that is what data is supposed to do. And this is why so many people get frustrated with their financial advisors or their accountants or their CFOs, is because people are just telling them, hey, this is the number. Nobody knows how to drive actions out of that. And those people do know how to drive actions. They're not great at telling the story about, okay, how do we translate this into something that you know how to do? You know how to provide the services, you know how to like train your team, all this stuff. And so helping people to see that through these numbers. And
Mhm.
so there's so much that we can get off of this. And so like I know that we're gonna run over an hour probably, but touching on the so you're gonna get this prior month overhead number from your financials, and it's gonna be your most recent closed out month. And if you don't know what that means, it means that when we talk about month end close, we talk about we have went through your financials, we have made sure that everything is accurate as far as your assets and your liabilities are concerned, and your profitability is accurate at that point. So when we have good financials for that, which, you know, our goal is to have that by the 10th, going back to as long as you are consistently focusing, like, you know, as long as your operations are consistent, this stuff isn't going to change. So if you have a lag in getting this information, don't let that be the thing that holds you up from doing this anyways. Like we can update it 10 days later and it'll be more accurate. It's going to be fine. So you're gonna update these two numbers. You're gonna get them from your financials. You're gonna get this straight up, just from counting the days on the calendar based on the business days that you're gonna be open. And then this is gonna give you like, okay, you're gonna start putting in here. We have worked, and this is just a historical example. So for instance, like this practice company, they ended up generating, they didn't hit their target. They hit current month to date, or they hit a whole month of revenues at 117,000. That's what they ended at, which gave them an average revenue per day of 5,500. And so, if our gross margin on that is, say this is a med spa and we were just looking at their gross margin when it came to consumables, that's saying that their average daily gross profit is $3,900. And what that is revenues less cost of consumables. And so their prior, and one of the things, you don't really need this information in there. I put it in there, but this is your variable cost, and this is just an inverse of your gross profit. And so this is telling you that regardless of if we're making 500 grand in revenue or 5 million, 30% of our revenues are going to our variable costs, because that variable cost is variable, right? So it changes as your revenues change. And so, what this tells you on down here is that break even working days, like it's saying, if you, this is your target down here, and we know we have to generate this revenue per day, it's going to give us this average daily gross profit, then our break even working days are 8 days. That means that after we hit 8 business days, and if we have hit our revenue targets on a daily basis, we're going to be breaking even at the 8-day mark. And what that means is that, and I put that little description down here, break even is the point at which your total revenue equals your total cost, resulting in no profit and no loss. And it's not necessarily what you want, but it's like at that point, once you get into day, if you're hitting this target and you get into day 9, 10, 11, 12, all of this gross profit is going straight to your bottom line. That means that at this point, after 8 days, you have paid for all of your fixed costs to run your company. You've paid for your fixed salaries. You've paid for all of these materials that are not they're fixed costs. You pay for your accounting fees, your lawyer fees. You pay for your repairs and maintenance. All of that stuff has been paid for, and only 8 business days in, which I think is such a fun thing to see, because it's in like, oh my gosh, more than half of your business working days that month are going to go straight to profit. And so it's saying that based off of this information, your estimated end of month net profit, if we're, now this is another important ratio in here, so I'm glad I just saw this. If we are tracking toward 30% net operating profit, it's saying that we should have about $39,000 in profit at the end of the month. What can you do with that information? How much would that change the certainty and the confidence in which you show up in your business? Like, how much would that motivate you to hit your goals? How much would that motivate you to say, like, okay, we know we can do this in 8 working days. What if we try to hit this in 7? Like, it makes setting targets so fun and so much simpler. And this is like a cool tool where, like, share this with your team. The thing is, like, I think that it's so important for your team to know numbers too, because there's going to be different areas of the business where they're going to be looking at things. They're going to be looking at numbers, and it's like, we want that to encourage action. And so I love sharing this with like the rest of your management team or your leadership team. Like I said, there's clients where we do this with them, and they literally go in there and update this every day, and it just gives them peace of mind, whether it is favorable or not favorable, that they are on target or not target. And the thing is about this is that, going back to wealth, love, speed, it allows you to course correct so much faster than if you're just waiting to where your financial lifestyle is that you only review your financials once a month. This is why we want this to become like your daily financial lifestyle. Your weekly financial lifestyle is your CEO dashboard. Monthly is reviewing your financials. Like, and this is so simple, right? If we just think about this, how we're gonna, like, how are we being the CEO of our business? And it's like, I know every day I'm gonna do this one thing. Every week I'm gonna do this one thing. Every month I'm gonna do this one thing. Every quarter I'm gonna do this one thing where I reset my core initiatives. And then once a year, we have like a big team event to review our business, like what were our actual results kind of thing. But it's like one thing, one day, 1 week, 1 month, 1 quarter, 1 year. It's so simple. And so I do need to make this one green. We'll put like the new calculator in Progress University to update it for a few of these things. And I'll bring some attention to the one in Progress University has a start here tab on it to be able to get some more guidance on that. I want to remake that though, because there, like I said, there's a few things I've updated. I want to make that simpler for folks. But for the most part, yeah, need to update that, for instance. Yeah, there's a few things in here that need to be updated. So the calculator is not wrong. And this is, oh my gosh, I can go off on a tangent on this. Inputs are so important. And so like again, if data is wrong, like don't blame the data, it's the inputs, right? So you got to go back and look to like where do we have like a process that's wrong? So the process that was wrong with this one is that I did not make the tutorial and my cells were highlighted black. So I thought that the formulas were all automatic, and they're not. So there's some manual components to it. So now I know that, so that now we have accurate data. So now we're going to make better decisions for our business. And so, and this one's like that too. So I need to fix these and update this. We'll get this updated and share this back with you all. But I want people to use this because nonetheless, it still gives you like, if you see nothing else on here and you're just looking at what revenue do we hit, that's all you're going to focus on is what revenue do we hit in our business. That's what we want you to focus on. And one of the things is that just to kind of close this out is at the end of the day, when this is kind of like breaking your familiar discomfort to get into your comfort zone. Like your familiar discomfort has been, you have no clarity over this whatsoever. You don't know what break even is. You don't know how many days that you're working every month to even break even. You don't have any targets. Like, so you're just operating out of this like hustle, hustle, hustle. And this is the difference between that transitioning from familiar discomfort to that comfort. Like this is your comfort zone right here. Like, because you know, when you have clarity, then you're in your comfort zone. Like that's what I would call comfort is clarity. So just start doing this. The fun thing about this is that as you start to do this every month, all you got to do is just copy this tab over. You start to do this every month, you're going to be able to quickly switch through these and notice like trends in this. Which one of the things I think is really fun is just looking at this. Like we have a client that we've been doing this with and looking at their KPIs that we're tracking, looking at their break-even calculator, like this has improved every month. And you can see it when, because, you know, we're just copy and pasting this template. We can see it every month we click over these. And so making sure that your numbers are updated in here. We'll make a new tutorial for this and re-upload that. Val is out today, but she can get that re-uploaded into Progress University for us. And I'll do a new thing to reiterate this on how to go over it to update these formulas and try to make it to where you have to update really just these things themselves. And then get with our team to get your numbers. If you're not sure what is my overhead? What is my gross margin? Like we have that information if we're taking care of your accounting. So ask us about that. Courtney, is there anything with that comes to mind or that you want to close out with?
I think like the last thought that comes to mind is we shared a lot of information, and when numbers are not the language you speak every day, it can feel so overwhelming. But what we would suggest to do, this is something that we would definitely say to grow, to have this become something you edit daily to give you that clarity, and it helps you be more intentional throughout the entire month. But that may initially feel like a lot, and so kind of how we were talking about before, with James Clear's example from Atomic Habits, starting with the one push-up, don't start with the 500 push-ups. If that's too much to look at this every single day, start with weekly, right? And once you do it and you get that clarity and the confidence from doing it for the first time, you're going to be encouraged to do it again, right? And build off of that and keep going. So yeah, I think just encouraging you to start to use this. And once you see that clarity and how it can help you be more confident in the decisions you make and your intentionality within the business, you're going to be motivated to continue to edit this, and utilize it. So
Yeah. Yeah, don't start out trying to like, you're gonna do your break even calculator every day for the next 7 days, and then this time next week you're gonna start your CEO dashboard. Like, if you go check out that training for the CEO dashboard as well, I mean, it is a lot. Like, don't get me wrong, and it takes us, even us, like as well as we know financials. That is not something like we onboard a client next week we have that CEO dashboard. The thing is that we design that with intentionality based on what your vision, your goals are, and what you current like where you are a combination of all of those things. And so like in most cases, it's 2 or 3 months before we have that CEO dashboard established. And then we start consistently tracking KPIs. Like there's a client that we have that I've worked very closely with them one-on-one for over a year now. And we are just now getting their CEO dashboard established because there are other things in designing their business that we needed to nail down before we got to this point. Now, could it have been utilized earlier? Yes. And we were tracking some KPIs in a different format. We were tracking like 5 different KPIs instead of looking at their entire CEO dashboard, which is really giving us insight on everything in their company from one tool, which is what I love. But it took us a long time to be able to get to that point because we had to be able to have the processes and the structures in place to be able to get that data in the first place and be intentional about tracking it. And we put a business plan together where we could do that. So yeah, exactly. Like one push up at a time, just, do your break even calculator every day for June. And then we can start talking about in July going through a series of setting up your CEO dashboard with you so that you don't have to wait 12 months to get that established. And if you have somebody doing it with you, I think it'll be so much simpler. So I'm glad you added that.
yeah.
Okay, cool. Well, hopefully that helps. And then you all know where to get in touch with us. Is that all you have for now, Court?
Yeah.
Awesome. All right, ladies and gentlemen, we're going to get out of here and we will see you all in the next one.
Bye.